Welcome to Fintech CTO Talks, the podcast that goes behind the scenes with tech leaders, solving the challenges and rewriting the rules of finance. Money moves fast. Does Fintech keep up? I am Ami, and in each episode, I sit down with CTOs, engineers, and innovators who are shaping the fintech industry, which is moving faster, smarter, and way more connected. Together, we will explore the platforms, the codes, the bold ideas shaping the future of financial technology, and yes, making it a little fun on the way. Today, on the topic of the speed code, we are joined by someone who has truly redefined what speed means in fintech. With over more than 2 decades of hands on experience driving innovation and operational excellence, Saurabh Girdhar is a technology leader who thrives at the intersection of business and engineering. He's architects systems that transform how financial services operate, turning loan approvals from days to minutes, leading to a remarkable 40% increase in disbursements. Saurabh has led large-scale cloud migrations, driving down infrastructure costs by 30% and boosting uptime by an impressive 99%. His focus on DevSecOps and automation has cut down deployments by 70%, empowering teams to deliver faster, smarter, and safer. He has also been recognized as India's first Gartner Engineer Community Ambassador. We welcome you, Saurabh, to the podcast.
Thank you, Amy. Thank you for the warm introduction. Happy to be here.
Absolutely. So my first question, I just want to begin with a basic one. What is the biggest bottleneck in traditional loan approvals that inspired you to reimagine the process?
Let me answer that in a simple way. I think the biggest bottleneck in my experience working in different companies in lending space is friction and latency, which is caused by legacy workflows. So there are a lot of manual handoffs and poor data flows. Systems are not connected; they are disconnected, and whenever any loan approval application happens, they create a lot of delay. So some borrower will submit documents, somebody will key into the systems, then some ops will approve, some credit will approve, operation will re-verify it will go underwriting. Each step require a lot of human intervention, follow-ups, and waiting. And in some cases it might lead to like weeks of time or days of time, 7 days, 10 days it can span, right?
Okay.
So it's not like one task, it's a series of sequential tasks, but they are not connected well. That is the biggest bottleneck.
Okay. So, when was the first time you started working on acceleration from moving from days to minutes, and what was the mindset? There is a mindset shift which is required, and it can be both technically and culturally. So, how was that?
So when we first embarked our journey, right, on reducing loan approval time from, let's say, days to minutes, we knew we had to change not only what we built, but how we thought about it, right? As you said, it's culturally and technically both.
Correct.
On the technical side, we moved from batch processes and fixed underwriting rules to real-time data ingestion. We automated decision making to a modular cloud platform, which allowed agility and speed. We started thinking of data flows, API, and microservices rather than manual reviews and handoffs. Everything should flow automatically straight through processing, we call it in technical term. On the cultural side, it meant getting the entire org to shift from let's do everything to let's do the right things first.
Hmm.
We broke down the silos, product, risk, operations, IT, all around the timers. How fast we go for approval process, right? We accepted that speed will be only safe if we clearly defined which cases will be auto approved, which will still review, manual review. You cannot underestimate the risk while doing the automations at the speed, right? And importantly, we position that as a strategic business asset. It was not IT supports anymore. It's a mix of that. Lending platform is a product which is owned by business and technology together. That mindset shift, culturally and technically, was the foundation which let us go to moving closer to decision in minutes.
Okay. So, was there a particular moment, like wow moment or aha moment, or a customer story, if you could share with us, that validated that speed could truly change the game?
Yes, absolutely. So I remember 3 years back, I was in Chile, Latin America, different part of the world, and there where we launched our first lending platform, right? I was visiting one dealership in Santiago. So there, OLX Auto has big warehouses, showrooms. You walk into a showroom, you select a car, the used car, and you just take it away just like a new car, and you take loan with it, get approved in few minutes.
Hmm.
So we onboarded the customer, we pulled the vehicle history, combined data, bank account, credit, everything. 5 to 10 minutes loan was approved, and we said to customer that okay, you can take the car now. Customer
Wow.
was still looking out the car, and he was so surprised and shocked at the same time, right? He actually told me that I came in thinking this might take a week. Thanks for making it happen
Absolutely.
now. That moment made me realize that we are not just improving things, we are shifting that customer expectations, right? What customer can expect from us, from waiting days. So second hand car approvals generally takes days, right? So but that happens in minutes. That change our mindset optimization to transformation. How do you transform the overall experience? And what made it so meaningful, that customer had previously experienced days of waiting on multiple visits
Hmm.
when
Hmm.
you go to traditional lender. And then we had real-time data integration, different system, vehicle system, dealer system, credit system, alternate data. And if customer actually told us that if it had to wait till until next week, it might have changed his mind to buy some other car or go to some other place, or car might have sold to somebody else who want to buy on cash.
Correct.
So speed actually preserved the opportunity as well for the business, right? From business viewpoint, we saw drop rates falling, right? Applicants who just walked out and applied right away did not abandon the process due to delay. You
Hmm.
might go home and change your mind. I don't want to buy this car. I want to buy something else. But if you
Absolutely.
just go there within 5 minutes, you say loan is approved, you take the car. It's just a decision. It's just like walk into showroom and buy something.
Absolutely. Absolutely. So, like, what goes behind the scenes, architecting a fintech platform that is, it is a complex process, it's a complex workflow. So, how can you do it in minutes without compromising the accuracy or, following the compliances also?
I mean, that's the first question anybody asks, right? How do we speed it up without trading of accuracy, risk, and compliance? And we all know the fintech is very regulated, right? So compliance
Absolutely.
and risk plays a lot of important role. Now the answer was you can't just speed up the old workflow.
Hmm.
You must re-architect the workflow. On the technology side, we move to modular API first cloud native architecture where all data arrives in real time. The decision engine seems to be having different segments and automate the low risk cases where system logs everything for audit and governance, but it approves that.
Hmm.
On the people side, we aligned product, risk, ops, and tech and security from day one rather than treating them in the last mile. It's not like tech build the product and then goes to security and risk. Oh, now you take care of.
Hmm.
Everybody was involved from day one. In our work at OLX Autos or KFI, we means that we need to have all the asset data, credit signals, partner ecosystem. We build the path for instant flow.
Hmm.
Now, the higher risk or unfamiliar cases still went through controlled manual review. So when I say we do in minutes, not for all the cases, but P70, P80 cases were straight through.
Correct.
So result came like with the improved conversion, right? We had lowered cost per loan, accelerated time to funding, and that's how we did it without diluting the risk discipline or regulatory compliance.
Correct. So, like, continuing the question, like, often when you talk about speed and risk control, like, it seems very opposite. So, how do you balance both and, take faster decisions with responsible lending, or rather, data integrity is managed? How does that happen?
Yes. So you're absolutely right. The risk and speed control often seems like opposites, right? So when you're actually pushing for decision in minutes or seconds, you run the risk of cutting corners. You
Hmm.
might be missing some data point, insufficient data. You do some shallow checks just to expedite, or you have poor governance. What we did was intentionally designed for both speed and control, so didn't have to trade one or other.
Hmm.
So at OLX, right, we launched an instant approval pathway for used vehicle up to a certain value, and that too from dealer partners, non-dealer partners. So now, when the platform pulled in a vehicle history, partner dealer inputs, and bank account flows, we auto-approved in 10 minutes. After 6 months, we compared the performance of auto-approved cohort versus the manual review cohort. The default rate was kind of in expected band. So that actually proved the validity that the engine was working fine. The whatever the thought process or the application we made was working very fine. Now, as long as you have control scaffolding building in, right, you can control the speed and reasonable outcomes. We never deviated from the requirement that okay, every loan should go into 2 minutes because
Hmm.
obviously it need to be covered.
Correct.
Really at Carefy, right, we had a product called Instant Discharge. How it works basically, let's say you are in a hospital and you have a cashless claim. Now you are good to go home, you're treated well, but still patient has to wait for 4 or 5 hours just because insurance approval will take 4 hours to come.
Absolutely.
But that's where the time matters, right? So if you let the customer go within 20 minutes, 30 minutes without waiting for approval, that is the whole product. Now if you
Correct.
take 4 hours there to approval, then the point of product is failed, right? So
Hmm.
we developed a complete BRE workflow for consumer product, and then we were able to do instant approvals, manual reviews. So, but still under the tat of 5 to 10 minutes. For B2B products, since ticket size are actually higher, it goes to 50 lakhs once year and all. We developed technology to collate all the information at one place, but the final approval was still done at the button of click of button, right? To cover
Correct.
the risk. So that's how, depending on the product urgency, how you cover the risk, the flow changes a little bit in different lending products.
Correct. So, like being a technology expert, can you give a small example of a process which led to a massive improvement in turnaround time or user experience, like, from technology point of view?
Sure. I'll give you two example, both one
Okay.
from OLX and one from KFI. What we realized, right, that the delay is not in the flow. Delay was always not the complex underwriting, but delay was lost in the manual document handling and verification handoffs.
Hmm.
So we replace the all the manual upload and review step with instant vehicle information API. We do the auto check of partner dealer data. That means when customers submit the application, we pull the everything, vehicle history, dealer instantly. So instead of a human to go and fetch those data, check those data, sometime it takes hours or day, the system did it in seconds. As a result, the turnaround time dropped from, let's say, 4 to 6 hours to under 30 minutes or
Wow.
under 20 minutes. And customer who were walking out of the dealership no longer had to wait in the lobby or come back the next day. Similarly, when we do B2B writing, we had a great team, and they will go to GST data, they will go to banking data, they will go to third party data, and they will go to different system, fetch that and collect all of that information, which might take a day for a customer because you
Hmm.
have to go in such a detail for B2B customer.
Correct.
But through technology, we developed a workflow where it goes in parallel to all different systems, prepare one Excel sheet, prepare a consolidated accounts management sheet, and just give download in like 5 10 minutes. Now all the information you need about customer is in one sheet only. You just open it, review, and then again you'd have derived data from those data points as well. So that's how you save from like one day to half an hour data, and then simply review that final sheet, and you can approve or reject the loan.
Absolutely. So, like beyond technology, when it comes to designing or human-centered design, when it plays a critical role. So, is it making these systems faster, and are people trusting it? Are people adopting it?
See, as everybody says, right? I mean, we all take off example of Steve Jobs or Apple, right? How the products get adopted. So, technology is as good as it people feels like, or they use it, right? So, I think beyond the technology, let's say cloud, API, decision engine, it all the human centered design which actually made the difference in adoption, right? So, we simply ask that what do the dealer, the borrower, operation team feel safe, or let's say worry about on the day to day basis, right? We simplified the journey, made it transparent. We designed the instant path with empathy, and we did for different segmented user. We changed the workflow. We had the embedded compliance elegantly, and then iterated based on the user feedback as well. Now, obviously, you need to put user analytics where the journey is getting dropped off. There are different tools to analyze that, and because of that, our system was not just fast, but it was trusted, usable, and adopted. And that's where that speed turns into competition advantage, because through tech you can iterate fast, you can get the feedback faster, and then you change based on the user needs.
Okay. So, when you're talking about speed, how was it perceived by the frontline workers or, the teams or the customers who are using it? Like, do you see convenience or do you see confidence or was there a pressure? How is the whole process?
I would say it's always a mixed feeling, right? Whenever anything new comes, people are
Yes.
excited, but human nature is to resist the change by default. So obviously, people get scared if something new comes because they have been using some process, some tools from long time, and then something changes, right? So the customer mainly react in two ways. First, they were delighted, right? That I came in thinking that within 2 3 days you will get me approval, and but I was still at showroom and you got me approved. So convenience
Hmm.
became like a talking point itself, right? At the same time, we realize speed only works if the confidence is built, right?
Correct.
If some customer asks what's happening behind the scene, now if you can't tell them what's happening behind the screen, they get confused as well, right? So we built UI queues and status updates so they can understand what's happening, what are the checks being done. So speed should not feel like a black box magic, but it should feel like a trustworthy process, right? If
Correct.
everything happens at one click, people get confused as well sometimes. So finally, we listened to our dealer partners as well, operation team. They told us the speed was great, but not only if the underlying data system exception workflow held up. If
Hmm.
decisions were fast, right, we had to choose paperwork and clarify later. So now the wow can turn into what went wrong as well, because if
Yes.
something get missed, right? So we build the process around the front line, aligning dealer, standardizing vehicle condition checks, enabling instant feedback. And that's how speed becomes a real game changer rather than just a marketing slogan, right? If the speed is not improving efficiency for customer or internal users, it's just a marketing, right? It's nothing else.
Absolutely. So, like, was there any friction, like, over expectation when you are talking about this, or is there any decision fatigue happening? And how did that overcome, or is it still going on? How does that work?
I mean, it's an ongoing journey if you talk practically, right? I mean, we had to guard not just for faster, but for the right, clear, and sustainable systems as well, right? So sometimes if you actually move too quickly without adequate design or explanation, it can backfire, right? That's how the industry
Yes.
works. Now, it has a huge advantage, but speed can also create a new kind of friction, as you're asking, right? I remember there has been some instant approvals, and customer walks in, he applies, and it gets, and then customer smiles, okay, all done. But now what happened? One time the customer came, something was off in on credit score and all, and it took more than 30-40 minutes because of the
Hmm.
manual review process. And
Correct.
now customer is saying, hey, last time I got approved for 15 minutes. Now why is taking 30 minutes? Now it's
Yes.
like to level up the expectation, right? For example, right now we talk about the normal, let's say, day-to-day use of internet, right? It's 100 Mbps. Now
Hmm.
if you have
Hmm.
to go back to 2G 3G speed, right, we all are like become very uncomfortable.
Absolutely.
Similarly, the expectation management, right, that's where I said the transparency and the detailing process comes into picture, that we are able to explain because of this and this reason this is happening or taking a lot of time. So it could be manual review, it could be automatic, or it could be some massaging of data you do. Now, obviously, friction of over expectation and decision fatigue drops after some time of usage. But in starting, yeah, I mean, people might ask why it's slow today, or I don't understand what happened. Like, let's say, for example, if WhatsApp or Instagram goes down for 1 minute, people like we all go screaming, right? What happened? What happened? So it's like speed is there, but obviously the expectations are increasing day by day.
Correct, correct. So, like, how does faster loan approvals change, the way financial institutions measure the success? Is it like, still about volume, or is it about experience, or both?
I think it's a mix and match. So there are different metrics we track, right, for companies, for customers. So first of all, we saw conversion rates improve sharply because
Hmm.
customers had no longer to wait for hours or day. Few of them dropped out of showroom or doing the paperwork check. That means more of the applicants we were turning into funded loans.
Hmm.
Secondly, after the dealer partner satisfaction improved. Now, dealer are the intermediate players, right? Who has been
Hmm.
frustrated by the delays, lost
Yes.
opportunities. They are showing the customer the car, but the loan didn't get approved. After 1 week, they get to know it's not happening. So that also changed a lot of things. Then the customer experience obviously improved in a deeper way, right? So when I told you as an example, right?
Hmm.
Customer says that I was not expecting to take the car today. I was hoping 1 week and all. So it's like they have given written testimonial saying that you guys are faster than I expected. So that actually build a lot of loyalty, and you take spike uptick in the referral business, repeat business, and all, right? So I think it's a well proven research. When the digital service quality improves, you get higher customer satisfaction, right? The NPS score goes
Absolutely.
up automatically, and
Correct.
that goes to loyalty and word of mouth referrals as well. And I would say internally it's very good because your cost per loan drops. So if the
Okay.
same number of team members, same number of resources can process more loans in the same time amount of time, right, your cost per loan drops and cycle time is shortened. They have fewer steps to do, fewer bottlenecks, less rework, right? So you can scale very well if you have efficient system.
Mm.
And obviously, the last, which is more important, the banking term is the risk and portfolio monitoring, right? Now,
Mm.
because decision making is happening faster with defined flows, you can actually track and analyze performance on near real time, right? You can build cohorts monthly, weekly, quarterly, and all, and you can actually see why it was getting approved, why it got rejected, because you have the defined rules there. Now it's not somebody manually taking decision, okay, and you don't know why that person said yes 3 months ago, right? You have all the logic and audit built into the system.
Mm.
So if the quality improves, cost per loan goes down, and conversion rate improves, right? It's a win-win for business in all the cases.
Okay, just give me an example with numbers if possible, about the whole speed coding thing. Just one example, easy to understand. Any
Speed coding,
example.
I would say turnaround time.
Hmm.
So if turnaround time improves by, let's say, 50-60%, it's a very good pro. Then you track the drop off rate. So application funnel, right? The percentage of users who start a loan process but don't complete it. So
Hmm.
it has to be lower. If it's higher, it's a no. And then customer experience engagement metrics, right? What's the conversion rate? What is retention? What is the NPS? How many approved customers go to actually use or disperse the loan? How satisfied they are?
Hmm.
Uh, I might not be able to share the exact numbers, but these are the
Hmm.
three, four metrics we don't normally track.
Correct, correct, correct. So, what parallels do you see between what happened in fintech and what's happening now at present in other industries? It can be healthcare or insurance, in the insurance claim processing, what is it?
So I think when we talk about the industry, I can best talk about healthcare insurance processing, because from last 2 years we have been working on the merge of insurance processing, health insurance, and fintech. So I think in fintech we moved from slow, manual, paper-heavy process to near instant decision, right? Using data automation real time. The same shift is happening in insurance claims.
Okay.
So insurers are automating the claim workflows using AI. They are allowing simple claims to straight through process. If somebody went to OPD, did a X-ray of bone, why you need manual review and all, right? You just analyze the data and then get it through. So that's reducing the settlement time dramatically. And in healthcare, the claims processing, payment workflow, they are also being digitized. So what used to take days or weeks can now happen much faster, right? So earlier, when you claim something, you send the documents by courier, it take 4 days to reach them.
Yeah.
Then they take 2-3 days to analyze them. Then they send a check to you, which will take 2 days to come, then 2 days to cash. Now everything happened digitally. You scan the document, you send it across, they approve it. Next day they process the automatic digital transaction and money is to your turn. Second, the motivation almost identical in both the sectors, right? Reduce frictions, reduce
Hmm.
delays, improve user experience. So fintechs also see drop-offs. Healthcare also, right? I mean, if you talk to anybody, right? See, if somebody is claiming a health insurance, right? It means there is some emergency at the home or with the patient
Absolutely.
or family, right? Last thing they want to worry about is the trust and all these
Correct,
hassles, operation hassle about health insurance, right?
correct, correct.
That's where the empathy also comes into picture, that it need to be seamless, right?
Hmm. Yes.
Third, I think the underlying architecture between healthcare and fintech are kind of real time similar. The playbook is similar because they have modular system, they have data hub, they have external data, automation engine, exception routings, and all. It can be done. And now
Hmm.
obviously the cultural expectation shift is also happening, right? So when people experience that 8 out of 10 things are happening fast, why those two should be slow, right?
Yeah.
That's why we see a lot of healthcare startups doing as I told you, right? Care 5, we had a product of instant discharge. You get well, you just use our app, and within 20 minutes you go home, right? Why to wait for 6 hours? We will take care of the settlement. I mean, that's how the expectations are getting high, right? So it's all the ripple effects of everything across around you.
Absolutely. So, one last question is, like, if we project the next 5 years, when we look ahead, what will speed mean to the next generation, of fintech? It can be into loan approvals, instant approvals, predictive financing, or the invisible banking altogether. What is the next 5 years?
I wish I had the true answer to this. I mean, if I knew this, right, I can build 2, 3 unicorns in next 5 years. I mean, the industry is very dynamic. We don't know what's going to change, but I'll try to give what I think is going to happen in next 5 years, right? So let me see, let me paint how I see it.
Okay.
First of all, I see a predictive and proactive financing. For example, decision before you even think to apply financing, embedding in everything you do, right?
Hmm.
So let's say a customer walks into showroom, picks a vehicle, and before the paperwork is started, system already signal, hey, you are eligible for this. Here you
Hmm.
pre-approved in, you can just simply pick it up.
Wow.
So that's something I'm expecting will happen, right?
Okay.
Similarly, invisible financing, where you have embedded or seamless or zero friction. For example, uh, the notion of submit application, wait for decision may feel orthodox after 5 years, right? Financing will be
Hmm.
embedded. You have somebody sitting behind the system, you are browsing the system, and you just tap on, let's say, drive away or buy, and you just take it, right? It all happens in the background without you doing anything. And the speed becomes an experience of like nothing. Rather than fast, it becomes like nothing.
Correct.
And then ultra short cycles, that decision will come more instantly, real time adjustment. So for example, recently RBI also changed some rules, right? So earlier the bureau reporting which used to happen quarterly, then had started happening monthly. Now they
Okay.
do bi-weekly. It might come real time though, so the decision making becomes very faster in that as well. And then some kind of trust and transparency as speed with the tools like technology like blockchain and all coming into picture.
Hmm.
There will be more transparency, more trust into systems. It will be hard to play around or do some kind of exceptional approval. So that's something I see. And then success metrics will also change, right? It will be no longer like time to decision. That will like a basic thing, right?
Correct.
So it's like time from interest to activation, or let's say percentage of customer who got an offer before they clicked apply, or let's say what is the drop off at the micro steps, document upload, receipt verification, and then friction score, right? How many touches that the user go. If
Hmm.
you are
Hmm.
doing 10 different clicks to get a loan, I think that will be too much.
Too
So
much.
maybe one click, two click.
True, true, true. Okay, we'll move on to the next segment of the podcast. That's the rapid fire round. I'll ask you a few questions and you'll have to be quick in answering. Okay. First is, if your wallet could talk, what would it say about your last fintech experiment? One line or one word?
I would say, you see, I'm sipping coffee, right? So when the system says approved while you sip your coffee, my wallet asks, can we finish the coffee at least before the funds arrive?
Nice one. Days or minutes? What's one thing in life you still wish took longer?
The same note. So I love my coffee ritual. If I'm being honest, right, I would like my barista to take 5 more minutes. I want
True.
to take a proper espresso, grind the beans, take the steam to swirl it a little more slower, and then make a nice heart out of it. I mean, you can do things fast, but there is something which experience is nourishing, right? So it's kind of therapy. So I still, before this podcast, I spent 15 minutes to make my coffee. I don't want to do it in 2 minutes. I mean, that's something which is like relax break for me.
Absolutely. AI in finance, best assistant ever, or the intern who still needs training?
I see AI as a in finance as a talented intern who's already showing up early, putting up in the work, learning fast, but still need guidance, coaching, and occasional check-ins.
Okay.
So this
If
intern is incredible. It can process millions of transactions. Though the speed is not in question. It can spot the fraud transaction, but how do we train it? So it's a part assistant, part intern, I would say.
okay, if fintech had a superhero, what would their superpower be?
So I would say two superpower. Obviously not the cape and all, but they would have lightning fast APIs. One
Hmm.
data pool here, one function there, bam, 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 and done. And second
Correct.
would be the transparency vision, where they you get to know the spot risk, fraud, value instantly, and you tell the customer why did you get approved in 90 minutes. That's
Hmm.
a delight for customer.
Absolutely. Would you rather build the next unicorn or the next silent system that powers 10 unicorns?
Oh, that's a tricky one. So, first of all, you don't
You
get to
just
know
said, you just said before some time you want to build two, three unicorns.
if I knew what's going to happen in 5 years, I can build, But see, you don't know that company will become unicorn or not, right? So it's a kind of very big on luck side as well. But I would say if I would still go for building that silent system that powers 10 unicorns. I mean, unicorns is flashy. You're the shining star and all, and you can get the rounds of funding. You're building big brand. That's amazing. But building the infra, for example, whoever built the UPI, right? People don't remember who built the UPI.
Hmm.
They all remember all the unicorns built over the UPI, phone pay, Paytm, MobileQuick. But whoever
Absolutely.
built the UPI, I think he must be sleeping a peaceful day.
Absolutely. 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 What's the one fintech buzzword you secretly wish would disappear completely?
I would say two. One is seamless, right? So everywhere we
Hmm.
use seamless. Even I use seamless in some cases, but sometimes glitch happens, right? And when we
Exactly.
actually say customer seamless, I mean it's not a seamless, right? Sometimes glitch happens, and it has to be very practical. So I'll push for clarity rather than saying seamless.
Correct.
Second is I would say powered by AI, which everybody is doing right now. Not everything needs AI, AI, and
Correct.
just for the sake of raising funding or just for sake of the wave going on, you should not say powered by AI. Some things can be solved by simple if else. You don't need AI to do that.
Correct. Instant loans, invisible payments, or cashless countries. Which one excites or scares you the most?
I think we already see individual payment instant loan. The excite me or like scares me the cashless countries, right? Imagine a world like payment transfer financial services are so embedded that the money moves like a thought, right? No wallets,
Hmm.
no queues. Did I pay? I don't know. Did he get the money? I don't know. We already see that happening with digital payments.
Hmm.
But the scary side is real here, right? The society is fully cashless. You are putting too many tremendous trust into digital rails, integrated system resilience, right? And what
Hmm.
if something goes wrong? I mean, cyber attack, system outage,
Yes.
exclusion of people who don't have digital access, right? So that's a kind of I would say that scares me.
Okay. Now we'll move on to the next one. You'll have to just answer one question into 30 seconds. According to you, the role of AI in speed code and how fintech can turn it in from days into minutes.
So I think when we are trying to automate a lot of manual processes, AI is the key tool. So let me walk you through right how AI can help. So for example, all the heavy manual work which used to stall the process, right? Document upload, scanned PDF, bank statement, asset checks, right? Now AI tool can extract key data from messy handwritten documents in 15 to 20 seconds.
Correct.
Tasks which used to take 20 minutes can be done in 15 seconds. AI also become a real-time underwriting engine, right? Instead of
Hmm.
waiting on manual review, system can ingest all the data. It can run machine learning models, deliver a risk instantly, risk model, right? And then you can cut down the time as well. There is smarter workflow orchestration where AI monitor for exceptions, route the right cases to humans, automate compliance checks. So whatever 10 people team were used to do occasionally can be done continuously by AI, right?
Hmm. Hmm.
So
Hmm.
AI does not just make some step faster, it collapses many sequential steps into streamlined flow. And when you design your architecture like cloud API services around the culture, right, you generally move from days to minutes in fintech lending.
Absolutely. Perfect. Thank you, Saurabh, for the amazing understanding on the topic and joining us today and giving your time.
Thank you. Thank you so much.
So, everyone, let's stay connected as we continue to explore and understand the evolving world of financial technology. Please comment below to keep the conversation going on. That was, bringing Saurabh's experience and perspective to Fintech CTO Talks. Thanks, everyone, for joining and understanding. We'll meet in the next episode. Until then, stay curious, stay inspired, and keep exploring.